Hello, and welcome to the second episode of the US Market Open with Rufas. So Rufas is my name, and I will be handling this particular session. Remember, these will be happening on each and every Tuesday from 4 p.m. through to 4:30. Sometimes we may extend, depending on the kind of content available for that day. So before we make any progress, I would like to begin with a mic test. So if you can hear me clearly, kindly type hi on the live chat, and this will confirm that everything is working just fine. Hello? So you can comment on the live chat if you can hear me clearly. Once you do this, then we progress and look at the US market open, key price levels, key news to understand as you proceed with your trading today. And once we cover these, I hope it will be easy to narrow down on trading opportunities using FX Pesa. Awesome. I have a response from Cyrus. Thank you very much. Thank you for your response. And I think it's time we make some progress now. So we'll be looking at a couple of asset classes and also individual assets. So I will be doing a span of commodities, starting with silver. We might look at natural gas. We look at the major currencies: Euro USD, Pound USD, USD Swiss franc, Australian dollar against US dollar, USD against the yen, New Zealand USD, USD CAD. We look at the VIX or the volatility index. We also look at the US Tech 100, or what we call the NASDAQ 100 index. We look at the Dow Jones 30 index and also the S&P 500 index. So once we are through with that, we might look at some highlights of a number of stocks that are doing their earnings reports this week. And once we are through with that, then I believe we'll have an update of what's happening in the market, and you'll be able to make the right decisions in your trading. So that being said, let's start right away. I would like to begin with a focus on the economic calendar. So I'll head straight to the economic calendar. So just a moment. Let's try and use a calendar that I commonly use. It's called the Forex Factory website. So simply just have to visit the website, harmonize the time in the calendar, make sure it's the same time as the time on your own device. Mine is GMT +3. Save those settings, and once you're done, click on calendar, and you should have an updated calendar showing in your own local time. So clearly, you can see we didn't have much of a busy week right from Monday, but today it seems like a lot of stuff is happening. So these ranges from one, we had some news early in the morning in Japan. So we had the monetary policy meeting minutes, and also change in the price of services purchased by corporations. These was maintained at a gain of 2.0% as expected. So not much of a volatility in the JPY pairs. And also we had the core CPI rising 1.6%, which was a little bit higher than expected at 1.5%. So besides these, the major news for today will be coming up at 5 p.m. And we'll be looking at the CB consumer confidence data from the US, the Richmond Manufacturing Index at the same time, and also new home sales data. So there will be a key interest looking at the housing market. Remember, at this moment in time, we are trying to understand the US economy, whether we are currently in a recession or not. So if the data indicates that officially we're in a recession, then most of the investment decisions will be focused on how to survive and thrive within a recession. So a lot of investment decisions might be based on inflation, trying to allocate your cash in assets that might do well in an inflationary period, or even in a period where interest rates are rising. So with that in focus, we know that in the previous quarter, that is first quarter 2022, the US economy contracted. So if the second quarter, which is expected to be reported this week, shows a contraction, then the definition of two consecutive quarters where the economy is contracting basically implies a recession. So that's something to keep in mind. So if you look at all the other data we're expecting for the week is tomorrow in the morning, CPI quarter over quarter. This will show the inflation rate in the Australia. Then core durable goods in US, that's still on Wednesday. And then the FOMC, that is the Federal Open Market Committee statement happening at 9 p.m. tomorrow. The federal funds rate, this is the interest rates. So we are expecting a hike from the previous 1.75%. Sorry, a hike of 0.75%. So the interest rates are expected to change from the previous reading of 1.75% to 2.50%. So if this happens, it's expected to strengthen the dollar. And if we get something higher than that, let's say 1% hike, then that would be very positive for the dollar. If it's less than that, then investors might be a little bit disappointed in the news. So besides these, we have the advanced GDP happening on Thursday. I believe this is the most important news regarding the point I just made about a recession. So if there's a contraction, remember previously negative 1.6%. So this time we're expecting an expansion of 0.4%. So if we get anything below zero, then that's a clear indication that we are in a contraction, and that might influence a lot of investment decisions. So that's key data expected at 3:30 p.m. on Thursday. And also on Wednesday, the interest rates data might cause a lot of volatility. However, as per today, being Tuesday, that is the 26th of July, we'll be focusing on the CB consumer confidence data. So this is a level of composite index based on surveyed households, basically trying to estimate the level of confidence that consumers have in the economy. So if people are more confident, it basically implies that their financial situation is not badly off. So individually, if you think about it yourself, if anyone from the government or corporations was asking you about the economy, how do you feel about the economy? What are your expectations? Mainly, you'll be giving an output or a response based on your unique circumstances. So if businesses, your businesses are doing well, you're making more and more profit, your job is relatively stable, you're the company where you work, you are hiring even more people, there's a lot of expansion happening, then there's a good chance that you'll be giving a positive feedback. You'll be saying that I'm expecting the economy to do well in the next couple of weeks or even months. So your consumer confidence is something that basically displays how you feel and also your current status financially. So if things are bad, your business is not making as much profit, your company is firing people, then there's a chance that you're going to give a negative report. So it's a very important data that tells how the households are expecting the economy to perform in the near future. And also it tells about the household trends. So if you are positive about the economy, then you tend to invest more, take more risks, buy more products. But at the same time, if you're expecting, let's say, a negative outlook of the economy over the next couple of weeks, then you tend to be a little bit conservative with your spending because you're not very sure about what might happen tomorrow. So in that case, if people have less consumer confidence, they spend less, and it's usually a very negative indicator of the economic performance. So in this case, it's a survey of 3,000 households, which asks respondents to rate the relative level of current and future economic conditions, including labor availability, business conditions, and overall economic situation. So these will be released at 5 p.m. So the previous reading was 98.7. This time we're expecting a reading of 97.3. So if it's something higher than this, then this would be positive for the economy. And if it's negative, then it will be negative. So that's it from the economic calendar. And now I believe it's time that now we look at the individual assets, try and do some analysis and identify some key price levels in these markets. So of course, we are not going to start with anything but the most commonly traded currency pair in the world. And this is the Euro USD. So the Euro USD was trading in a sideways momentum for quite a period of time. And by a period of time, I imply a couple of days. So this would be the first day, followed by the second, the third, fourth, fifth, and today it seems like the first day that the market is now breaking off this sideways momentum. So series of days where the market is trading sideways, basically indicating that there was indecision in the market. Neither the buyers were pushing the prices higher, nor the sellers pushing the prices lower. So this sideways momentum is clearly indicative of indecision. But now, as we approach the interest rate decision tomorrow, then we're expecting the dollar to continue strengthening against the euro. So it seems like the breakout is in the direction of the previous trend. So the previous trend was clearly bearish. So you can see the market going all the way down and then pulling back down, up, moving sideways, and now the break is to the lower side, which implies a continuation of the original trend. So it's very interesting to trade this market because some key price levels are easy to identify. So for instance, if price was to accelerate downwards, this would be a nice target, 0.998, a little bit below the 1.0 price level. Also, you can see the bottom around 1.0. So there was this time when price was going down. The Euro USD got to parity, a level where the Euro was trading 1-to-1 to the US dollar. Bounced the first time, the second time. That time attempted to break, went all the way down to around, this is 0.995. I believe that was the bottom in the Euro. So after hitting that level, bounced back up and started moving upwards. So moved for 3 days upwards, and then for 1, 2, 3, 4, 5 days sideways. And now it seems like we are headed back down to retest that level. So key price level, if price keeps going down, would be the 1.0 price level. And if we happen to break that level, then the 0.995 might be a very interesting price level. So before we make further progress, I'd like to mention that this is not a recommendation to trade. This is purely educative. Risk management must be practiced at all times. So this particular session doesn't constitute as advice to trade. So it's only educative. You understand how to do this, you do your own research, and make your own decisions. So now that we are through with that part, let's move on to the next asset. So the pound USD, a very interesting currency pair. Currently, we are seeing a very nice pattern here. So I'll be trying to analyze these. Just a moment. So we had this particular trend happening here. So a very nice trend line indicating some very strong or very sharp bearish momentum. So this is something that anyone, even a beginner, could easily identify. The market was following this particular channel-like pattern. Then, some time back, say 2 weeks ago, the market broke towards the upper side, started forming higher highs, and also the lows started getting higher. But then it seems like now the market is trading in what looks like a wedge. So a wedge would be a particular pattern in trading where the highs are getting higher and the lows are getting higher. But for this particular rising wedge, the two trend lines tend to be approaching each other. So in this case, if you are to zoom out, notice that this trend line is approaching this trend line, meaning that the volatility is dying out or choking out. So the initial move here is a very sharp and strong one. But if you look at this consequent move, is a little bit smaller. And these moves keep on getting smaller and smaller until eventually the market breaks in one direction. So here, the first move here is about 27, 25 points. The second move from this bottom to the top, here we are seeing 17.23. The next one here we are seeing 16.61. So clearly you can see my point here that each and every consequent move is getting smaller and smaller. So downwards from high to low, you can see 15.52. The next one from this to these is about 1,007. From this high here to this low here, 1288. So you get the idea that the market is getting making smaller and smaller swings. So currently, as we speak right now, the pound USD just bounced from the lower trend line, forming a very nice book candlestick pattern called a bullish engulfing. So with a long lower tail indicating a rejection of lower prices. So going forward through the session, there's a good chance we could see the market continuing to vary towards the upper trend line. So these could be an idea for the rest of the session. So also take notice that the majority of the day has been totally bearish. So early in the morning, pound gaining against the dollar, gets to the upper trend line, dollar gains against the pound, gets to the lower trend line, and now as we enter the New York session, the market is not overly optimistic about the US dollar. Now we are seeing the pound bounce strongly and headed back up towards the upper side. So this is quite an interesting idea, especially if you are a pound USD trader, intraday trader. If you are a longer term trader, then it's probably not a good idea to go for such a market. The best idea would be, let's say, to probably wait for a continuation as the dollar continues to strengthen, maybe even after the news tomorrow when we see the interest rate data from the US. So remember, the dollar is expected to strengthen with an interest rate hike. And also the recession news, if confirmed, might be weakening for the dollar. So it's a little bit of a mixed signal, but the interest rates take the day because they have a direct influence in the currency supply and also in the bond market. So a very interesting play here. So a very strong bounce, bullish engulfing pattern. So from the book pattern, we may expect the pound now to strengthen against the US dollar towards the previous high. So that currency pair focusing on today is very interesting. We have the US dollar trading against the Swiss franc. So quite an interesting currency pair. We have had rate hikes happening in both currencies. We know that for the Swiss economy, the interest rates are still in the negative. So notice the strong bounce that just happened from the upper trend line. So from the lower trend line, we're just trying to connect these lows with lows. So clearly a very nice bearish channel. So you can see the value areas here, right from this top here. The market has been finding resistance, close or at these levels here. And the most recent swing happened a couple of hours ago. So we're expecting the market now to continue accelerating towards the lower side. So as the dollar remains weak for the session and maybe through the rest of the day, this trend could continue. And if this kind of happens to continue, then a bearish trade would make a lot of sense, with a key price level being the stop loss here. So the stop loss is just above the previous high. So if you decide to go for such a position, then an area around 0.96708 could act as the resistance here. So if the market goes back up and hits the level, then you make a loss. But then if you're right, then there's a good chance the market could continue pushing down. And as the Swiss franc strengthens against the US dollar, then you get to cash in your profit towards the lower trend line. So a very interesting momentum trade to check out. So if you just started trading, you're trading on a demo, this is a good idea to trade, build your own trading system, having tested, understood how things levels play out over time, then use this to your advantage. So as we proceed, I would like to mention that this is an interactive session. So if you have any questions arising from the presentation, then feel free to raise those questions and I'll be responding to those questions directly as we proceed with this session. So you're all welcome. Raise your questions in a specific market relating to the US dollar or the US economy that you want us to focus on. Feel free to raise that question and I'll be checking that out right away. So Australian dollar trading against the US dollar. This is what we are seeing. So a relief rally happening in a very interesting level. So clearly, you can see that the prevailing trend was a bearish momentum here, more or less like a channel that lasted about 4 weeks. So this is what was dominating in the market. So we had a nice bottom somewhere around here. Our market breaks towards the upper side, retests that area and then accelerates all the way up, gets to this resistance, and now it seems to be playing around here where the trend seems to be weakening. So if you look at these, then you think of these as the resistance, and then you look at the support side, then we are clearly looking at a market that is bouncing off the lower trend line. So the previous high did not make quite a big surprise or quite a big difference between this high and this high, which may imply that the trend is weakening. So rather than forming a high that is along the upper trend line, remember, now we are seeing these, meaning that the trend might be weakening. However, it's still a key area to observe that the market is bouncing from the lower trend line and could be headed higher. So this is already a red sign that the trend might be weakening. So even if you go for a buy trade, you may not target a very high level compared to the previous swings. So straight up to the USD JPY, this so far has been one of the most interesting currency pairs to trade, mainly because of the strong bullish momentum that we have experienced over the last couple of weeks or even months. So all the way from back in March, talking about March this year, you have seen the currency gain by 19%. Even previously here, we saw about 21%. That is the Japanese yen losing to the US dollar. So now it seems like the market is taking on a breather. We have seen several of these breathers happening. So in this breather, the yen is now strengthening against the dollar for quite a period of time. We had a sharp drop here towards the lower trend line. Market goes up, doesn't quite form a higher high. In this case, the prevailing pattern here is a lower high, and then heads down and forms another lower low, pulls back up, and now it seems like the market has failed to push even higher. And now, using a smaller time frame, and in this case, I'm using the 15 minutes chart, you can see the kind of momentum we have been seeing since yesterday. So market forms a high here, another high here, but today doesn't quite get to the same high. So if you look at the lows, from this low to this low to this low, if you extrapolate on this, then the current candlestick is a clear signal that the market is looking to break. Remember, the candlestick has not closed yet. So if the candlestick closes below that trend line, then it's a clear indication that we have broken that level. And there's a good chance we might be seeing the price proceed towards the lower side. So a very interesting area to observe the candlestick, wait for the close. And if the close is on the lower side, then you might have to use some other indicators to confirm the thesis or the theory that the market might continue pushing further down. So you're not limited to just the price action or even my trend line. You can do some further analysis to try to identify the level. And if it works for you, then this could be a nice trading idea, going for a short position and then targeting lower prices with your stop loss just above the previous high. And I'm talking about this high here on this tail. So just a couple of pips above that and you're good to go. So a very interesting play in USD JPY, betting on some further weakness of the dollar. So if the dollar continues weakening across board, you could take advantage of that in USD and AUD USD here, USD CHF. So the dollar weakening again, pound USD, dollar weakening, and so on. So a very interesting play today. Similar case happening across board. So it seems like everyone is shorting the dollar or something of that sort. Let's see here, something similar. Market was going down, found some support here. Seems like the New Zealand dollar is also picking up, trying to push the prices back higher. So you get the idea of what's currently happening. So with the Canadian dollar, seems like this one is a quick runner. So if you just focus on the lows here, you notice what has been happening. So very strong and sharp support level that has been holding for quite a number of days. These draws all the way back from the 8th of July. And now you can see there was a common trend line somewhere along here, with the exemption of this area here where the market broke towards the upper side. And this was on the 14th before getting back into pattern on 15th. So sometimes you may experience a book pattern that breaks for a period of time, maybe as a result of a news announcement. Market gets very volatile and then goes back to pattern and keeps on playing around that. So right now, if you look at the USD CAD currency pair, it doesn't seem at all to be trading at a very nice area. So when the market is just trading in between a pattern, you don't want to participate. You might want to wait for the market to get to the upper side or even to the lower side. So if the market was to get to the lower side, let's say the lower trend line, 1.281, this would be a nice area to look for a position. or even to the upper side of the trend line, 1.292, this would be a nice area to look for a position. However, per se, since the market is trading in between the trend line and it's not at the edge, extreme edge of each trend line, then it's a market that you might want to wait out until you see a clear-cut potential trading level. This may not be a good trading level according to my opinion and analysis. So the volatility index keeps going down, meaning that a lot of market participants are expecting lower volatility in the S&P 500. So the market keeps choking out, doesn't seem at all very convincing. So notice what we are seeing here. So a very sharp resistance level here. So if you look at the support, seems to be following some path somewhere along here. So if you now zoom in and look at the past couple of days, this has been acting as the resistance. So quite a bearish trend indicating expectations of a lower volatility. But at the same time, remember, if the market remains less and less volatile, then there is a good chance that at some point you will see high volatility or an impulse move in such a market. So if we see some striking volatility happening in the S&P 500, then the VIX or volatility index might be the leading indicator. So just observing this performance here between this resistance and support, you might be able to foretell something happening in the S&P 500. So this is the S&P 500 here. This is what we are currently experiencing in the S&P 500. So a market that has been quite on a bearish momentum. Remember, this started on the 1st of January. So the 1st of January was somewhere here. Sorry, not 1st, but on the 3rd. I remember the beginning of the year, 3rd was the first trading week. First trading day, because the rest of the days were on a weekend. So you look at these, look at the couple of swings that the market has been forming, and it's very telling that the market has been extremely on a bearish momentum. And if it's a bearish momentum, especially on an index, then the upper trend line is the most interesting part, because this is where you squeeze in your short selling position. So you may have missed the first one in January, you may have missed, let's say the second one somewhere in March. Even the third one, somewhere in April 21st, you may have also missed this one. The top here appeared somewhere in May 30th, and now the market is trading at the resistance level again. So the idea is to look for signs of bearish entry, such as this one, and then go for your short selling position. And I think it's something that is ripe right now. So you might want to be looking for a short selling position, targeting a huge swing towards the lower side. So you can see the most recent swing here and how significant it was. So if you can capture such a move, then you are a good trader. You're making money in the markets. Then you stand a chance of being successful. So if you're able to capture these moves, then you're good to go, especially when you're following the trend. So the risk-reward ratio can be significantly good for you as a trader. So if you manage to capture these, it's by taking risk at the extreme high price levels. So taking a risk here, taking a risk here, taking a risk here, and now it seems like we are at that zone again, where you are able to take a very small risk, and if you are right, you get a very good reward. So I think our most potential trade for the day will be the S&P 500, since it's trading at an extreme level, and this is on the 4-hour time frame, meaning that if you're able to hold on to the trade, there's a good chance you might hold on to the trade for 1, 2, 3, or even 4, 5 weeks and so on. So as long as the bearish market continues, we see the weakening of revenues from the quarterly earnings being reported this week, basically indicating that the stock market is weakening, and this might have an impact on the overall S&P 500. So if this keeps on continuing, then this is the general idea, a trade that you might not meet next week or even the other week. So this is one in a period of time kind of opportunity that happens where you're able to risk a small amount of money going for a large amount of money. So We'll be covering this more in the fire trading series. So you have just joined this session or you are watching this later after the presentation. You should know that I'm doing fire trading series. On this series, we are looking at moving from a pure novice to a professional level trader. So we are beginning with the introduction to trading. Then we look at charting systems, we look at market patterns, candlesticks, and all those things, risk management, anything that you need to get started and become a professional trader will be covered in a very short series moving from episode number 1 through to episode number 10. So we already did episode number 1. So the next episode will be live on Monday, and this will be from 8 p.m. through to 9 p.m. So make sure to check out the FX Pesa YouTube channel. Once you check on that, you should find that list, go through it, and hopefully you get to build your own skill and understanding of these markets. So as we approach the end of the presentation, remember it was supposed to be 30 minutes, so we are already way past that. So managed to capture a nice trade on Palantir, having hit the lower trend line somewhere around here. Market seems to be continuing along a very familiar pattern. So you can already see what we are seeing here. So market is consistently forming higher highs as well as higher lows, sorry. So my market entry was on the previous swing here. So market kept going up and up and up, and now almost hit my take profit and then went all the way back down. So you might have to wait for another swing where the market gets to the lower trend line, bounces, and then continues pushing lower. So in the most recent swing, the market did not get to the upper trend line, to my take profit. So here we might be expecting to see these, and then the market extends to the next swing. So it's quite an interesting stock to watch. So if you haven't heard of this share, Palantir, I would suggest you take your time, go and research it, see the fundamentals and also the technicals, and make an independent decision of whether this is your right kind of stock to invest in. So I'm just sharing the name. So Palantir, this should be, I think the New York Stock Exchange, PLTR. If I'm not wrong, it could be in the NASDAQ, so just have to confirm that. So this is it. There is a good chance we might see this stock continuing to rise. So with the current price valuation of $9.53, if it remains strong and beats inflation, then we could see some even higher valuations. So US oil currently trading on a bearish momentum. So it's a period where investors are worried about slowing supply as well as slowing demand. Slowing demand means that all the business or economic activity we were expecting to see in this period seems to be lower than expected. So we could be seeing slower demand for oil. So if there's higher production, higher manufacturing, then we expect higher consumption and higher demand for oil. If this is slowing down, business is slowing down, production estimates are going down, then it might mean lower demand for oil. So when there's high demand for oil, prices tend to go up. When there's low demand, prices tend to go down. On the other hand, we look at the supply side. So supply has been quite a big challenge, especially with the sanctions happening between Russia and Ukraine, the Eurozone and the US. So getting a constant supply of oil has been quite a challenge for most economies. And at the same time, we have had some supply chain issues. So with supply chain issues, less shipping activity happening around, this has brought a lot of pressure from the supply side, pushing the price of oil higher. So over the last couple of years, not years, but months, we have seen oil prices rally for a very good run here. So for US oil, from a bottom of $8.8, and this is in April 2020, the price of oil rallied and kept going up until it got to a high here this year of $126. So you can imagine if you're able to buy at 8 and then sell at $126 within a period of 2 years. So since hitting this high, notice the price went down, formed a lower high, and now it seems like it has entered a bear market. So from this point, market went back down, traded in somewhat something that looks like a triangle to me here. So we had this kind of formation here. The market was just oscillating up, down, up, down. Before it broke to the upper side, formed some bullish momentum for quite a number of weeks here. So kept going up and up. Then after a period of time, choked out and started forming the bearish momentum. So the current price pattern is forming some bearish momentum with some very nice swings towards the lower trend line and the upper trend line. And now the most recent movement is where the price was accelerating downwards right from the upper trend line, didn't quite get to the lower trend line, bounced and went back up. So these brought the idea of a bearish pattern, a bullish pattern here, which kind of looks like an inverted head and shoulder. So if this was your left shoulder, then you'd have your head extending all the way down here. The market goes back up to the neckline, all the way up here. And then the other shoulder starts forming from this swing here. So the market goes down, gets to this area. So if the pattern is completed, basically means that the market goes up, breaks that trend line, and gets to the upper trend line here, or what we might refer or describe as the neckline. So the neckline would be something or some price level around here, or even slightly slanting somewhere along here. So if this pattern is completed, then it would be a sign that the market has bottomed and is now looking to go higher. So breaking this pattern would mean higher highs and no higher lows, which would imply a reversal in the price level. However, as at the current price level, it seems like the sellers are entering this market and they are attempting to push the prices back down. So we are currently trading along at the upper trend line, which is something that was tested some time back. So if the market finds resistance here and starts going down, then it might be an idea to go for a short selling position, targeting prices that are all the way down. So if I remove these lines here, indicating the inverted head and shoulder pattern, then I would be left with these, which might imply a short selling position from the upper trend line. So a very interesting play here, where the market could find resistance and then go all the way back down. So it's a matter of wait and see. If the candlesticks indicate a strong entry by sellers, then you definitely go for a short selling position. So thank you very much, guys. Thank you for your questions, and I hope to see you on the next session. So how can someone use the US stocks to get the stability of the dollar? I don't think the dollar is going to be stable anytime soon. So if you're looking at US stocks to get the stability of the dollar, probably you're doing it wrong. So things are bad. If we actually get into a recession, then we might see some stocks stagnating, some of the stocks getting some big sell-offs that like the way we saw with the Walmart yesterday. So it really depends on the outcome of the data that we are going to see this week. So if there's a sharp interest rate hike, then the dollar might be strengthening, not stabilizing. So you might see a lot of volatility in the dollar. And at the same time, the stock market might be weakening, so not stabilizing, but more volatility in stocks. So I wouldn't be betting on the stability of the dollar right now. So thank you very much, guys, and I hope to see you guys on the next session.